Yeah, so stock's been on a wild tear, and
Can't click on the
I think the
graphs.
first thing I want to talk about is like what's been going on. Why has the stock market moved so violently? I think if you go to the first graph, so that kind of shows the Buffett indicator. So it's just the way they
Oh, you
value
can't.
stocks, and
You can see.
yeah,
Let me see if I can
you
open
guys
it.
can see at the top right there.
Ah,
Yeah, Buffett indicator. So we're actually at a higher valuation than we were during the dot-com bubble, which is pretty crazy. But I think something for us to kind of think about is that we're in a different stock market than we were in 2000 because
100%.
a lot has changed. So back in 2000, the government didn't have QE, and so basically what QE is how's the
Quantitative
easy way? What
easing.
do you have
Yeah.
an easy way to quantitative easing, an easy way to describe what that is? I'm trying
Mm,
to think of an easy way.
not in particular. It's along the
Let's just
lines. Yeah, go ahead.
uh, let's just say that the Fed has been printing a lot of money
Yeah.
and they've been buying a lot of assets. So they've been buying bonds, things like that.
Trying to keep the
Just
market
buying, yeah, trying to
stable.
keep the market afloat and stable, basically.
Yeah.
And without the federal government doing that, then we maybe would have been in a different place during COVID, and the market probably could have easily gone down even lower. Because what they did during COVID, they didn't.
Oh,
The
fuck.
reason that we have those kind of levers to pull on now is because of what happened in 2000. Basically, like they saw what happened, they're like, okay, we need to find ways to be able to help out the market more or help smooth things out in these when these crazy times happen. And so things are a lot different. And so I think that's the first factor. Even though I still think the market is wildly overvalued and it's going to catch up to it eventually, the market is in a different place than we were in 2000 when we compare valuations. The other thing too is 2000s, why the stock market crashed is it was like the dot-com bubble. That's what the nickname for it is. And it's because it was the first time that the stock market saw all these stocks being taken onto the market. So, all these super high growth stocks, kind of today we see them all the time, but in the 2000s, it was the first time that this happened. And so I think the market holistically is in a different place. I think valuations still matter, but innovation has come a long way. A lot of technologies have come down in price. Um, there's more retail money in the market. Like you go back 20 years ago, like there was no Robinhood. There were a few platforms like TD Ameritrade you could buy on, and it was really expensive to purchase a stock. Like back in the day on TD Ameritrade, when you purchase stock, it costs you like 20 to 30 bucks, if not more, to buy a stock. So
Mm-hmm.
outside of the fees that you're paying for the actual purchase of the stock, it was $30 on top of that
Right.
to buy and sell it. And so the marketplace has changed a lot, which in my mind, I think these valuations can go even higher than like, is this the same? Okay. I think that means that the stock market can go even a crazier high valuation than it did in the past. Um, okay. Ah, bastard. Um, so I think those are some things just to think about the kind of overall macro market is that valuations right now can go a lot higher than they did in the past.
Right. It's
Um,
access, right, to being able to
yeah,
trade.
access and even the type of companies like
Right.
Facebooks and things like these are companies like yeah they're worth a lot. They're making unseen amount of growth every year in revenue. And that has a lot of impact on valuations when those are some of the biggest companies in the world.
Right.
Where 20 years ago there were no Facebook, there were no app, or maybe I don't know if Apple was there 20 years ago, but there were more traditional stocks like banks were like the biggest things in the market, and other industries that maybe aren't as high of a valuation as tech is. So there's
Yeah.
a lot of
Apple's been
different,
around
I
since
think,
81
factors.
on the market.
Yeah,
And a random
and
fun
they probably
fact,
got
how much do you think their stock was?
a buck maybe.
Less. We'll consider it a penny stock
You
back
did.
then.
I'm gonna drop a knowledge. Did you know that one of our uncles purchased Apple stock back in the day when it was like 80 cents a share?
Huh.
Anyway, that's another note.
Yeah. Interesting.
But yeah, we're cousins. Anyone who's listening who didn't know that. But yeah, so I think the market holistically looks a lot different, and so I think those are factors. Did we not make it? Ah,
No.
bruh.
You're sitting there
I thought
watching
I was
some
looking at
rando
myself.
play? Damn,
I
man.
started moving
You were
my
like, I'm doing so good. How am I?
I started moving my my thing around. But I think those are just some of the things, and that's why I like this article. And I could share it. Let's share it in the stream
Yeah, yeah. I'll
so
pop it
people
in the chat.
can read it.
I'll pop it
Let's
in the
start doing
chat.
that actually. Let's start sharing all the articles that we look at
Yeah, yeah.
for people to engage with us. But it's just a different market than it was. And I think the article says your grandfather's market. It's just in a different
Yeah,
place
this
than it
isn't your
was.
father's overvalued market.
Oh yeah. So I
Yeah,
think what they
grandfather's like
say,
80s, right? We're talking 90s,
yeah.
2000s at this point, but yeah.
I can't remember the line that they put. It was really good. They said, "Oh, things are overvalued, but perhaps not overpriced," which was a
Mm,
really interesting concept. But yeah, there's also like a lot of other things that weren't happening 20 years ago too, like interest rates. Like interest rates have been on the decline to all-time lows over the last 20 years. More like 50 years, they've been slowly going down and down and down. And so there's a lot of factors that are continuing to prop the markets up and can continue to do it for a while more potentially. We'll have to see what the market tells us, but that can, there's a lot of factors.
right.
Um, but let me bring up one of these other articles because we can
Yeah,
talk about
overvalued and
maybe,
perhaps not overpriced. Yeah. And it's interesting, right? They're comparing Jerome Powell to Alan Greenspan. Obviously, different eras.
yeah,
We didn't really have quantitative easing back in the day. Austerity
hmm
measures weren't really put into play. Like, it was a completely different ball game.
yep,
Back then, monetary policy. I mean, we created, just as Wall Street did with, and the mortgage companies, right? The mortgage-backed securities and all that.
yep.
You got to get creative as new economies start to take shape, and so it's pretty interesting, nonetheless.
But like another couple other factors that are reasons why the stock market has gone crazy, and you can talk about it some a little bit, Nate, about saving rates and consumer
Oh yeah, yeah,
spending.
yeah. I'll pull that up here. Just looking at the interest rates. That's pretty interesting.
Oh yeah, interest rates have just plummeted over the
Yeah,
last
dude.
50
So
years.
yeah, the savings. I'll pull this one up and I'll throw this one in the chat as well. Great graph here from Fred. It's economic data. This is really stable data that you could pick from here. But great articles. I think was it 3.1 billion was the last quote of how much are in the average American, or not average, but the total savings and savings accounts of the American people. I think it's 3.1 billion. But you see the graph here, the personal saving rate. Oh God, okay, cool. That recovery, yeah, let's go. Oh, fucking game. All right.
I don't think it's showing up on you. I think the SNDL screen is still up. Just a heads up.
Okay, yeah, I'll pop it up here in a sec. Yeah,
No rush. I'm just letting you know.
yeah, thank you, thank you, thank you. Ooh, almost got my booty whacked. Oh, I did get my booty whacked.
I'm winning this one,
Cool
bro.
transition to show the wife. She wants to see it. All right, let me line this up here. Give me like 2 minutes race. We'll get it going. That timing. Of course, I got
Oh
it in front of
shoot!
me.
I was not expecting that.
Oh, you
Tied for 10th
fuckers.
place.
Yeah.
Yeah, get up there, little guy.
Whoa, this one has a spinny thing.
Yep.
Did not
I
expect
got
that.
blasted, bro.
Okay, we're seventh.
7th place.
Nice job,
Ooh.
teammate. Let's go.
Ooh, cool transition.
Uh,
They are pretty dope transitions. I gotta give Nate the credit on that one.
it's team effort. We both picked it, kind of.
But kind of like what we're talking about is like saving rate. Basically reached the highest. Oh, let's see it.
There's one. This is our entry into stock talk game right there. So just heads up.
But bam,
Bam,
West
son.
Side.
Thank you for pointing out the graph, cuz. I'm going to just fast forward to this last few years
Yeah,
so folks
go
can see
for it.
this. But you see it's monthly. I'm not going to pull up the charting, the raw data, but you can see the saving rates just astronomically
Lit.
more than everybody else, right? 7.98%. Like it peaked at 9.1 in 2019, right? You could assume with Christmas and everything, people were saving up and then spending after. But yeah, April 2020, right? So we hit the pandemic. People start saving 8.3, 12.9, and it peaked in April 2023, 33.7%. And it still remains relatively high, right? It dropped
I
a little
think the
bit.
number is still higher than the last 50 years, right? If you zoom out,
Yeah, yeah.
the number where we're at is still like double, I think,
It's
all
all
times,
time, man. Yeah, I mean, it
right?
reached a
Yeah.
point like back here. Let's see, like
In
14%.
hyperinflation.
Yeah, that's back in the 70s. Yeah, you
Yep,
got
hyperinflation happened,
right. And so, and
which we'll talk about inflation soon.
maybe it's not even comparing apples to apples in that scenario, but just the mere fact that with the Biden money, people not really going back to work, which
Uncle B,
Uncle B, and people
Uncle B
not
giving us the dollars.
and people not returning
That
to
should be
work.
our first NFT. Uncle B,
Uncle B.
Uncle B giving us the
We can
dough.
make a crypto off that. Uncle B crypto. Just oh gosh, darn it. Of course,
Everyone put their stimulus money in the Uncle B crypto.
for real, dude. Well, there's the ongoing jokes about people getting them Biden money, shoving it into Tesla stock or meme stocks. It's
Let's
just,
go, dude. I'm killing it right now.
oh, you got it? Nice, nice. So
But
yeah,
yeah, so like we can bring up the other graph in a second too after
yeah,
Nate finishes the round. But I think what's really interesting is seeing the relationship between saving and spending. So in theory, when you see really high spending, you should see savings go down.
right.
But what you're seeing saving rates go up and spending rates reaching all-time high. So it's like obviously it's, Uncle B
So
and
the correlation,
and
right? It
Uncle
should be
T too.
inverse.
Uncle Trump gave us some money too.
Yeah,
So
Uncle T started it. Uncle B just finished it.
yeah, yeah.
But
Oh,
politics aside,
R.I.P.
just taking a look at the graphs, right? I'm going to zoom this one in a little bit more so we can kind of run this parallel. But yeah, the correlation here is obviously spending.
They should have an inverse correlation, but they're
Exactly,
not.
right?
That's the interesting thing.
And they're matching up quite heavily. And this is retail sales, right? So we're not talking people
Yeah,
doing
that's just
mortgages and all
retail.
that kind of stuff, or debt per se. But retail sales, um, look at that six.
All my stimmy money wants. I mean, that's a smart thing to do, man.
Mm-hmm.
I think we're all in that boat,
U.S.
putting
retail
the
sales and
stimmies
food
into the stock
services,
market.
right? So yeah, ideally you would see that a little differently. And since we were talking inflation, I'll just pull that one up right now too, while we're at it.
So that's what's interesting is like the reason I think the stock market still can run a little bit more and make it even more overvalued is that we're seeing investment or we're seeing spending go to, astronomically go to all-time highs, and we're seeing saving rates going to all-time highs. So eventually that savings rate is going to come back down to the normal, but for it to come back to the normal means people have to spend even more money. And if people spend even more money, then that means the
Sorry,
stocks are just
Randy.
going to keep going higher.
Right.
Like
So
that's what's going to happen.
so it's interesting, Randy. You say that it all went to debt. It's I don't want to say it's funny. It's ironic you say that because now credit card companies. There was a report a couple weeks ago that came out that credit card companies are struggling to have their customers maintain debt because everybody's paying it off. They're starting to provide some incentive for folks to start
Mm-hmm.
carrying some more debt on their cards because that's how they
Yeah,
make
it's really
money, right?
insane.
On interest. And so because everybody's paying it off, the unintended consequences of Poppy B's money, Uncle B's money is people are paying off
Poppy
debt.
B. Poppy B.
So it's a pretty interesting unintended consequences kind of
They like the
scenario,
old white men.
right? But just don't go around sniffing hair.
That
You'll be
moment,
fine.
that moment was too good. I had to take it.
That was good. That was good. But I mean, just all of this stuff, it's fascinating on so many levels. Like what we call behavioral economics. What do people do when they're given money? What decisions do they make? But at some point, you do have to grab a B. That's a good one, Jake. I like that one. Uh,
Yeah, Grandpa B,
he's not
there you
uncle.
go.
He's not uncle at this rate. But definitely, I'm always curious, just from a behavioral economic standpoint, of what people are willing to do. And it's a lot of behavioral economics is around retail, around numbers. What products do you sell? You wonder why they have a small, medium, large. People are more likely to opt for the medium, so you can manipulate the price accordingly. But based on that, hence retail sales gone up. Not Black Friday, Amazon Day is coming up, and it sounds like there's a lot of people cutting some deals for the retail folks because people have money, right? And
Yep.
now travel industry. This is why I've invested in travel quite heavily about 6 months ago. Is people are going to want to fly. There's a survey that came out recently. Can't recall who did it. It wasn't Yahoo or CNBC or somebody else. And essentially, more than half of the Americans are going to travel in July. So either by car, by plane, whatever it may be, retail sales are probably going to jack up. Restaurants are struggling to hire people still. This
Yep.
is like the weirdest paradox is, well, maybe
Mhm.
it's not weird because people are getting money for not working, but, and retail is predominantly the low paying jobs where a lot of these folks are qualifying for Biden money, but folks are trying to hire
Unemployment.
for real, man. And I get it, right? 100% I understand it, but
Oh yeah. If I was in that place, why would I not do that? Why would I
exactly.
not take 45K a year off unemployment? Like who
Right?
wouldn't
Some
do
people are
that?
making more than
It's
two
only
hundred
common sense.
dollars, 200 plus. Like some are even making 500. I've seen and more than they would if they took a job at you know minimum wage, what have you. So that's just a very interesting. Oh my god, I fell all the way fucking down.
You die?
No, but that hurt.
Okay, good. Good.
Very good. Oh god, I'm about to die. But with people saving, people going to travel. The problem now is in Chipotle's, fucking everybody's trying to figure out how to bring employees back. They're paying people more. Who was it that's raising their
Paying them
minimum
a
wage?
lot.
Fuck. What did we
Bank
call?
of America, that's I think that's separate though.
Yeah.
But a lot of my gosh, this thing is freaking fast. Oh my gosh. Okay, this is a new one. The balls of death out here. Okay.
Oh
Oh,
god
this one's
damn it, people! Why are you stopping right
hard,
there?
bro.
Oh my, dude, fucking people are dumb. Anyway, they just fucking
Oh,
stood
let's
there.
go.
Why are they all fucking
Okay.
dumb?
Oh, someone died.
I did.
Oh, bummer.
Because people right here, people all gathered up.
Oh, oh, good job if
Good
that was
move.
you, Rice. Watch out for the balls.
Ooh, ooh,
Oh
recovery,
no!
recovery. Come on, Marshawn Lynch it. Run through it. Oh
No!
yeah, nice.
Oh my gosh.
Oh,
This guy's a troll,
that
bro.
button launches them.
He just hitting the thing. Let's
Rice trying
go
to get
top
back into
three.
it. Yeah, thank you
If
for
we stay
carrying
at
me.
top three.
Greatly appreciate it. The balls of death are out there.
Let's
Chill out.
go. The balls of death. There you go.
Randy
Is that what
Savage.
I said?
Yeah, the balls of
Did I
death.
say that?
Yeah. Rewind it.
Bro, my li I'm literally this like my lines are just like a highlight reel,
Watch out for the
bro. Like
balls.
someone needs to just quote my life, dude. I'd be saying some funny
Some
shit.
gnarly shit, man.
Oh man, that's funny. The balls of death out here. Um, but yeah, so it's interesting. So I think, as summer comes and like Nate saying, people want to travel, like some of these stocks are going to highly benefit. And so to talk, like Nate said, like airlines might be a good buy. Like a stock that I've been looking at this last week was Madison Square Garden stock.
Oh, interesting. I've looked
So
at
they had a
MGM.
pullback,
I was looking at
huh?
MGM Resorts and a couple others
Yeah, yeah.
too.
MGM was another one I was looking at too. So it's
So
really
I'm
interesting.
just gonna let
Get
people
out of here,
around.
dude. So it's gonna be really interesting or it's gonna be interesting to see what actually happens with consumers over the summer. If they do travel as much as we think they are, and then finding stocks that are going to benefit. I
Yeah.
think that's important is in this next phase of the economy, what's going to sell off, does that mean Facebook and Google's of the world are going to sell off a little bit and you want to maybe find, oh my gosh, we only have one tail,
Yeah, I'm
bruh,
waiting. I'm gonna wait 30 seconds. There's no point in running around right now.
this is not looking good for us. And what is it, top how many teams move on? Come on, dude, how, why is it so hard to grab a tail?
We're gonna get this guy. We're gonna close in on him. Let's go.
Uncle. Oh, there's still 30 seconds. Jesus.
Little bitch. Come here. How am I not getting this dude? Fucking grabbing his tail. Bullshit. How am I not?
11
How
seconds.
am I not getting this guy? Thank you, little bitch.
4, 3,
That was a game
2,
winner right there.
1. Let's
Boom.
go!
Grabbed it with 10 seconds
We're
left.
clutch.
Let's go.
Did Amazon just buy? I think MGM the
No, the
studio, not
studios.
the.
Yeah, so
Yeah,
they bought the
yeah.
rights to fucking James Bond and all that stuff.
Teammate balling me. You know, dude, it's a team sport, Rice. It's a team sport. But yeah, so it's gonna be interesting what stocks benefit. But the thing you have to think about the overall markets when you're thinking of the S&P 500, the Nasdaq, the reason that they might pull back is because what the stocks that are overvalued right now. So the big tech, things like that maybe need a pullback, and the rotation to stocks that have more room to run, like we're mentioning, like MGM, maybe Madison Square Garden, things that are really going to benefit from things reopening. Like I think Madison Square, they said they had a sold out for the Knicks playoff games. Unfortunately, they lost. But
Wrong button.
where am I even supposed to take this thing?
To our nest. Oh
Our
fuck! I thought that
nest.
guy was on my team.
Oh shoot, there's a gold egg down here. Where'd it
I
go?
got it. I got it.
Okay, I'm holding the guy. Go, 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 go.
Thank you. Down here, right? We're supposed to put it down
The
here?
red zone, the red zone, the red zone, yes.
Okay, cool. Oh, damn, he's got 3 eggs.
We need to
over
play
there.
some defense
Yeah,
because
yeah.
people are coming down here. Oh, how many? Oh yeah, we got all the gold eggs. We're good.
Yep.
If we just keep holding this guy and trap the eggs down there.
Oh, no way. This mother.
Oh my gosh, now both of them are coming.
Fuck me.
Not today, Satan.
Oh, fuck. They got it. God damn it. I didn't see that blue guy.
I'm holding one of the eggs. As long as you hold
What the hell?
another one.
I want my egg. My fucking...
We got 13.
Oh, nobody in yellow right now. Wait. The fuck, game? Are you kidding me?
We got 14. We're in
Yep.
second.
Yep, I'm just throwing all the yellow eggs out. Make sure that they... Completely different technique.
Is it top 2 teams?
Yeah.
Hopefully.
Yeah.
Are we sure? Because we're in second.
Yeah, we good.
Okay.
Like literally just throwing yellow eggs out.
So I mean that kind of brings up to the next point as I just sit here with an egg in my hands. This guy doesn't grab me.
Yeah, we're good.
Second place, let's go. Please let it be top 2 teams.
So,
Oh, well, let's find out. Oh, yes, let's go. But kind of bringing up like some metrics on how the market's valued. So there's these people over time that have made different indicators to track if the stock market's overvalued or undervalued or at market value. And some people take like average market caps, or not market caps, PE ratios, price to earnings. There's one called the Schiller Index. What's the other one? There's a few of them. But what we're starting to see is we're seeing some other ratios already exceeding the dot-com bubble, and we're seeing some starting to approach the dot-com bubble levels. And so, you want to share another article, Nate, if you can?
yeah, is it the
Maybe
advisor
this one.
perspective one?
Yeah, this is this one. Yeah, that's a good one. Oh shoot, what do we do
yeah,
here?
Randy.
Basketball. We're
Carry
playing.
balls?
Oh no.
I don't. Wait, what are we doing?
Playing basketball.
Oh, we got to score it in our hoop? Is that what we do?
I don't freaking know, dude.
Or we scored in our hoop?
I'm assuming we have to do it in the blue one, right? I don't know. Never played this level. I'm not sure.
Oh yeah, we got to score it in theirs, I guess. Fuck,
That
went
makes
the wrong
sense.
way. God damn it.
Did you just give him a point?
No, not yet.
Oh. Go, 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 Mr. Yellow Man. I'm holding him,
Oh,
bro.
Fucking hell.
There
dude.
we go. Oh, where'd that ball go?
What? How'd he grab me? He's fucking 10 feet away. Watch that go
How
in.
the heck did they got 2 points now?
Oh my
Shoot,
god, bro. This
you
game.
missed that one.
What the fuck, man?
Bro! Was that you?
Yeah.
I think it was.
Let's go. I'm gonna hold this. How?
Bruh. Dude, we're getting stomped, bro. This is like the Lakers just getting stomped.
You got it? All right.
I'm gonna try.
There we go. Nice. Nice.
2 points.
Where the ball's at? The fuck?
Right in the middle. It's up in the air.
Uh,
How do we even get that ball?
how did I not get
There
that
you go.
guy? No, get the fuck out of here.
Dude, we got
Bullshit,
stomped
dude.
on, dude.
This game is rigged, man.
I mean, we didn't know how to play it on the team games, the colors with the thank you, Randy. Fuck you guys. But as we're saying, like we're seeing some of the indicators already showing higher levels than the S&P or than the .com bubble, which I think it should alarm you a little bit, and some that are getting closer
Where the ball's at? Yeah, thanks, Randy.
to the .com level. But where the ball's at, dude, Randy, you're a god for putting all these quotes in here. Dang, we missed the Rocket League tournament. We can do the second chance.
Yeah, let's hop in. Rice, you want in on that?
Sorry, I just hit the mic with my hand, everybody.
Good.
Apologize.
You guys get to see a black screen for a second. Empty black screen. To be,
Was it Epic Games? Epic Games. Hopefully I have it downloaded. But I think you got to start taking some of these levels of these readers into consideration with the overall stock market, because it should alarm you a little bit that the valuations. Ooh, look at that transition. So just pay attention to these and see kind of where they go. And the reason I wanted to talk about kind of like what makes it different than the .com bubble is for this context that some of these readings, which some of them already are a lot higher than the .com bubble, but not all of them, we could definitely see valuations and metrics at a much higher level than we did during the .com bubble. Okay, what's going on with my freaking Epic Games? My computer's tripping. 1 second.
oh, love it when it does that. There's another game mode on there too. It's pretty interesting. Different. Look at that. That's my electric Ford 150.
No.
Bum, bum,
Let me do
bum.
something real quick.
Okay. Fucking rims.
What is going on?
Swap those rims out. Let's swap them rims out.
Doesn't even say that.
Maybe we'll go money. We'll go money. Money up the car since we're streaming.
Dude,
right
my thing's tripping on me.
now.
It's not letting me open. See if I can open Rocket League directly.
Money.
We might have to abandon this because I don't think my game's opening.
No.
Yep, my thing is not letting me open it.
What thing?
My app for.
Epic?
Let me just do it through. Let me just do it through Steam. Yeah, it's like freaking out on me. But let me just play it through Steam. But yeah, so pay attention to these indicators. I think they're going to be really important over the next few months. I shared it before, but I think we're going to get a little upwards move in the market over the next month or so, month and a half, and then I think we're at more risk of a correction in the market. Just kind of post summer, because I think some stocks are going to get a little hype in the summer. But after that, I would be careful. Dude, my computer's tripping, bro.
Yeah, I can hear it in your mic. But yeah, I think part of what I got from this is the market is overvalued, somewhere in the range of 121% to 272.
Yeah.
Depending on the indicator. And so
oh
down
my gosh,
slightly. I don't know if I would even call that down slightly. But I mean, that in and of itself tells you the market's doing some funky stuff we've never seen before. I mean, you couple just the crash we had, right? and the closing of the economy, now the reopening, now people have money. Like, what's going to happen next? So people are just pumping money into here. You got the institutional investors also putting some money behind some of these stocks, as kind of you were mentioning earlier too. AMC, you have institutional buys going in, pumping, dumping. ANC is a good example, right? It reached a high of $70, and then it came down and did you freeze up on me? No, you froze up on me. It's all groovy. Market valuations, actual subsequent 10-year total returns, excuse me. Graphing is very important, as Chill Deal was alluding to, but the auto corrections is going to be key here, I think, within the next 6 to 12 months. That right, Dill? Cool. Thank you for agreeing with me. So we're just trying to figure out how do we want to move forward in terms of our investment strategies, but also reading other people's next moves, right? Got to be a little ahead of the game here, specifically with retail investors. I'm trying to figure out their strat. Coming back to the workforce means people probably won't have access or the time available to look into these stocks.